We saw the S&P 500 on Thursday of this week declining some 37 points. So it was a very sharp move to the downside. In fact, let's take a look at that on our 60-minute chart that you can see right here, which looks at the intraday movements of the market. And you can see basically we got that relief rally on Friday, which came as the tensions eased over North Korea. And China data came out really weak, and oil breaks for 2.5%. But Japan GDP really was strong, up 0.4%. And Bitcoin soared at that point over 4,200, and it continued to make new highs during the week. So we saw this update can't come in on Monday. We saw this news out on Tuesday where export prices surged 0.4%. Bonds had a drop on that, and the dollar finally started to move up as interest rates started to edge up a bit. We can see that the market basically broke early and then kind of moved sideways. There wasn't a whole lot going on. Overnight here on Wednesday, Europe had good data, and they led the United States into a rally in here. But then the Fed minutes came out during the day, and the members were split in there. They were overall, again, very dovish. It's all about not seeing the 2% inflation growth that they're looking for. It's sick. I mean, it's at 1.7%. Are they going to keep these ridiculously low rates at these levels? Scared to death that they might break the market, which looks like it wants to break anyway already. And we saw what happened on Wednesday. We got a little bit of a downside move in here. Thursday, the ECB came out, and they had concern about the strong euro. So the dollar got an upside move. The euro had a break, but then selling really started to come in. And then on Thursday, that doubts really were hitting about the Trump agenda. And then when rumors came out that Gary Cohn was resigning, which turned out to be false, at least for now, then the market added to a free fall condition that we saw in the market in here on Thursday. Friday overnight, you can see they kind of held in here. They tried to edge up a little bit. There was a lot of selling that came in during the morning, first hour. Then we got a rally. Consumer confidence was strong, and rumors came out, and then it turned out to be true. The confirmation that Steve Bannon is out, and I think the administration just thinks it's going to make them think that they're acting in ways that are sensible, prudent. I don't know. It's all about what they look like. Market got a rally, but we're in this one of these periods where rallies are not likely to hold, and you could see it started to pull back again here as we have about 2 hours left on Friday. So that is a look at the 60-minute chart for the week. Let's look in some detail at all of these indexes and get a sense for the SPX first as we look at the short-term daily chart. And you can see in here what I just described to you was now you'll see that there's a dotted line, some dotted lines in there. Those are alternative cycles that we have as we see an important bottom that came right in here, and then a rally, and then rolls over. So we're always looking at the alternatives. We always want to understand the possibilities of some different formations. Right now we're in the formation that we originally looked at, which was the low that occurred here, the rally, the sell-off. That's this one right in here. And then the next rally, and then the next sell-off, which goes out to here. So this was a pretty feeble rally right in here in only 3 days, but that's what happens when you're in free fall type markets, and then it comes down again. So you can see the red arrow here. The momentum has now switched to negative in there, and I think that we are in a market that has massive risk when I look at this. These are the patterns that we get when markets are in free fall markets. Here you could see the S&P 500 for the first time since last April has now gone to negative momentum. That is significant, and there are, even if it only lasts for this period of time, which would be very rare, that would be about 2.5 weeks of time. And I think that, our projected low was sometime in late August or early September, so that wouldn't surprise me. I think that this is a very risky period. Let's just look at all of the momentums while we're here. The NASDAQ really in a whipsaw. It tried to look better right over here as Apple got legs again, but now it's lost its upside momentum. And the Russell, RUT, you could see it was the first one to turn down. We warned about that, and the momentum in there is very negative. Here is the massive downward pattern in Russell. It came up and hit our sell zone right on the money, you can see right there, and then rolls over. And here is this pattern right in here. A couple more days down, an attempted rally, and then more free fall. That's what it looks like. But the projection oscillator is a little oversold, and right over here on this bottom, the market forecast indicator is flashing a buy. Now, it flashed a buy right over here, and we said that we thought we'd get an uptick. And when it did, it rallied $20. It was huge, but the market's just too weak. It couldn't hold up. Right now, we're massively oversold again, and that says to me that if I'm right and we're in a free fall market, the market continues down in a big way, I'm expecting the Russell to overperform based on this. In other words, not fall as much on a percentage basis as the other indexes. So that was just worth showing that to you. So overall, let's just take a look at the NASDAQ chart right over here. I don't think I looked at that one. And you can see that right in here. So the NASDAQ got down to the short-term support, and its pattern looks like it has some more dangerous days coming out here again. And here's that alternative pattern, which would extend the low out to the first week of September, which is where we're guessing that this wave of this free fall is going to end. So we think that there are much lower prices in there. Let's go back to the SPX, S&P 500. And this cycle low support right here, 1407, 1406, that is our immediate target right now. And there is another one at 2380. I'm switching over here. I normally don't show this, but right over here at 2406, here's the other one at 2387. Usually I don't show the weekly on this segment, but I want to get those numbers because we're in free fall. So 2387 to me is really a reasonable target in here. And remember, this was our period of extreme risk, and you can see that certainly was a period where the market moved down in one significant way. You can see that. We don't think it's over. We don't think the rallies can hold, and we think that 2406, 2387, keep your eyes on those particular numbers. One more thing to look at, and here is the intraday, and I want you to see these, look at the S&P 500, the Russell, and the NASDAQ, and all of them in negative momentum, and pretty severely so. So you're moving a long way down away from the slim ribbon, the 13-day moving average. Generally, when you do that, you get some choppy action, but we still think the trend is down, and all of those are absolutely negative when you look at that. So you might have some reason to believe you want to buy dips, but I'll tell you, if you want to buy dips, you could be in some real trouble. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.